Okay, we are live. We are live. Good to go. Welcome back, investors, to Ticker Time News. I'm Adam, and here's a quick take on the markets today. On a what was this? This was a spooky Friday the 13th. Oh no, the markets did pretty good today, even though it was a Friday the 13th. Good thing this wasn't in October. I guess that's when it's really bad luck, right? Okay, enough of that. I'm getting the nerves out of the way, right? Before we get rolling on this thing. Welcome. I'm glad you're here. Do remember, though, that even though I do have a quick take on the market and we talk about what happened today, why it happened, and what to expect going forward, we don't always get the day-to-day movements exactly right. So use our knowledge and place it with your knowledge and come up with a trading strategy or investing strategy that works best for you. So with that said, remember, the best thing about this live stream is the fact that I get to answer your question. So if you do have a question, leave the ticker symbol and your question in the comments. We'll go over it live during the show. I'll get to quick take out at the beginning, answer your questions at the end. All right, let's rock with this thing. Today was an awesome day in the market. The S&P 500 rallied 2.4% on Friday, the 13th. I said that already, didn't I? Bouncing from an oversold condition and closing back above the psychological 4,000 level. The Nasdaq even jumped 3.8%. The Russell 2000, it popped 3.1%, both outperforming with solid gains, while the Dow Jones rose 1.5%. It was a risk-on day from the get-go, starting from strong showings in foreign equity markets, and then continuing into the close of the U.S. markets. All 11 S&P 500 sectors finished higher, with gains ranging from 1.1% utilities and healthcare to 4.1% with consumer discretionary, with individual leadership belonging to the beaten up mega cap stocks that I've been talking about all week. I'm sure you're tired of hearing about it. I've also been sharing this information with our investors on Patreon. And if you would like exclusive content to go along with your investor journey, then click the first link in the description, the link in the live chat, I believe it's pinned actually, or go to tickertimenews.com/strategy. I'd love to see you there. Now, risk sentiment was aided by a recognition that the S&P 500 was able to push higher after nearly entering bear market territory yesterday. Look at the S&P 500 chart here on the screen. I'm going to go to the 5-minute view of this thing. Wow. Just wow. Let me open this up just a little bit. So yesterday at the close, okay, right in the middle of the screen, that would be the close yesterday. We had a rally right into the close. The S&P 500 was literally inches away from reaching a technical bear market, which is when you reach 20% from your high, your most recent high, which would be the January 3rd close of this year. 20% inches away, but it didn't happen. Rallied into the close, and then it was a coin flip, right? Was the market going to continue going down, or was this a sign of good things to come? I was leaning towards maybe we'd go back down. And quite frankly, I'm still not convinced yet that this rally is going to be sustained. It could be, so don't get me wrong on that. But we need more than just one day to know whether this rally can be sustained, like the snapback rally that we had at the end of March after the spooky death cross, right? Well, here we are. This morning, we gapped up pre-market, rose in the beginning, and then we traded flat for the rest of the day. So all the action occurred right at the beginning. Market open, 9:30 a.m. Eastern time. And then we really hit a top at 10:30. So for the first hour, it was boom. We were going. We were off running. And then over the next from 10:30 to about 12:30 p.m. Eastern time, the market did creep up a little bit. and then we reached our high for the day. So all the action first thing in the morning. For the investors on Patreon, I actually sent out a rare morning note that could a relief rally begin? Could this be the beginning of a relief rally? I sent it out before the market opened. I believe it went out somewhere between 8 and 8:30 a.m. Eastern time. I usually don't send out notes first thing in the morning. Usually they're after the market is closed. But I felt something this morning. And one of the signs, and I'm going to hop over to Bitcoin for just a moment. The Bitcoin chart, still looking at the 5-minute chart here, right? Usually, if Bitcoin has a bit of a rally, right, overnight, then it's possible that that carries into the next day for the equity markets. It's not a perfect pattern, but it is a pattern that I have been noticing more frequently. If Bitcoin overnight, right, 1 a.m. Eastern, all the way through 5 a.m. Eastern, if Bitcoin is green and it's up, a lot of times that shows that especially the tech sector could have a good day coming. And if Bitcoin is red and down, then especially technology could see a down day. Now, again, it's not a perfect correlation. Don't get me wrong here. But I have been noticing this pattern. And I'm curious to dive into it a little bit more to see if this is the case. Could Bitcoin be predicting how equity markets will react come morning? Okay, just wanted to share that with you as a thought I had on my mind, and want to make sure you had it. So there we are. All the action was had today. And you can see the 4,000 line. We got above that right here at 10 o'clock a.m. Eastern, and we stayed above it. And we stayed above it until, I guess, traders went on a coffee break in the early 2 o'clock in the afternoon, because we dipped back below that 4,000 mark, but we closed above it. And that, to me, is a promising sign. Along with, and this is information that I exclusively shared with our investors on Patreon, that for any rally to continue, for more than just a day, especially on a Friday and Friday the 13th to be even more dramatic, we need to see the mega cap companies kick into gear. We need to see them kick into gear. So if they are running, Apple is a good indicator. Let's go ahead and pull up Apple on the chart. I'm going to go back to the daily view on the chart. I'm going to take volume away just so it's a little easier to see. I'm going to go to Apple in just a moment, but you can see here, here's how this week went, right? New yearly lows were made each day. And then we gap up and close above 4,000 today. Great seeing. Apple, there we go. All right, here's Apple, daily view. It's up, it's green, right? Let me go to the 5-minute chart. Since Apple has such a huge market cap, 2.38 trillion, when it moves, it pulls the market with it, right? And it had some rough lows yesterday. Even though it was only down 0.03% technically on the day, it still went from a high of 146 to a low. Am I looking at the right day? Okay, yeah. So Apple, oh, silly me. I'm still on the 5-minute view. I thought I clicked back to the daily view, and then I went back. Okay. Sorry, I got mixed up there for just a moment. All right, here we go. Apple, here we go. This looks better. A high of 146 and a low of $138 a share. That's a big movement for Apple. Now, the candle itself, if you just take away the wicks, was down 2.69% yesterday. So the candle barely moved, but the wicks were huge, especially on the bottom. And then the day before that, Apple was down 5.1%. So these big market cap companies, they're the ones that you watch for whether or not this rally can be sustained, right? So on Monday, when traders come back in, investors come back into the market, that's something that we need to watch. Okay, let's see here. Where were we talking about? The S&P 500. It was able to push higher today. It was able to push higher, nearly entering a bear market. I can't believe this. Do you know the pundits that you see on TV? SPX, that's the ticker symbol I use for the S&P 500. The pundits on TV, if the S&P 500 went into bear market territory, you know they would have gone crazy. We're in a bear market now. They would have been screaming from the top of their lungs. Fear, fear, fear is what they would have been spreading. Now, again, one green day from an oversold market, it doesn't mean we're out of the woods yet. We still have to be cautious. We need to watch, again, the mega cap stocks. Right here in the middle of the screen, this was our snapback rally that we had after reaching a fresh low for the year, a slow buildup, and then we had the death cross occur on the chart. And that's when a short-term 50-day moving average crosses down and under a longer-term 200-day moving average. And it's a lagging indicator, meaning the market's already been in a downtrend. So our snapback rally was 1, 2, 3, 4 days, and then it was a flat day, a fifth green day, a red day, 6, 7, 8. We had 9 sessions out of 11 that were green. So if you didn't jump in today, you didn't miss a whole lot, right? If we see, like we saw with the snapback rally happening over here on Monday, Tuesday, Wednesday of next week, then we might have a confirmation, especially if Monday comes in green. We could see a real interesting makeup in this market, right? So there was also the ability for the market to rally early today. That was the key of everything. Now, news that factors into the support of a relief rally were reports from Bloomberg indicating that Shanghai was aiming to have no community spread of COVID-19 by May 20th, spurring hopes for a relaxation of restrictions for this month, and that Beijing, well, it refuted rumors of potential COVID-related lockdowns. Crude oil, it rose today 3.7% to $110 a barrel again, amid improved demand expectations because of what's happening in China. Short covering activity, meanwhile, I think that was a pretty big deal today. in the market, especially for a lot of the smaller cap growth speculative companies, like what happened earlier this week. And it's really evident in the post earnings pops from Affirm, AFRM. And I'll have a video diving into Affirm's earnings coming out shortly, a standalone video. Their earnings call was awesome. A lot better than Affirm. And Affirm had some troubling things to say on their earnings call, but there were some positive things. I did a video on that. If you have some time, check that one out too. But Affirm really had some awesome things to say about what they think is going to happen. And they were up 31.4% today. 31.4%. But I want to do this right quick for Affirm here. I want to measure their low yesterday to the peak today. I want to measure that. I want to show you this. Let's get it lined right up. There we go. And if we run all the way up to today, right there, you're not going to believe this because it doesn't look right in the larger scheme of things. Affirm was up from its bottom low yesterday to its high today, 88%. That was an 88% swing from yesterday's bottom to today's top. And you think, wow, that's a big percentage point, right? But you look at where it's fallen from, and oh my goodness. So the point of me showing you Affirm's action is I don't want you to feel like you missed out because you were being cautious today. You have not missed out. Okay? Another one, and I'm not quite sure how to pronounce this company's name. I think it's Duolingo. The ticker symbol is DUOL. And I'm bringing it up because it had a powerful day in its own right. Up 34% and another 1.7% in the after hours. This thing has moved too. And again, look at where it's come from. Let's measure from their bottom yesterday to their top today. Line it up, run it up there, boom. A 58% swing from its bottom yesterday to its top today. But you look at where it's come from. You haven't missed out. And the short covering also extended to the outside gains, the oversized gains of Robinhood, ticker symbol HOOD, HOOD. And remember, you can do all this charting at home with me. There is a link in the description of this video for TradingView. There is, you can sign up for a free account. Doesn't cost a penny. All right, here's Robinhood. Earnings, meh. They were up 24.8% today. How could a company like Robinhood that had earnings that were not so hot shoot so high today? And up another 0.3% in after hours. And their low from yesterday to their high today was a 40% swing. So even Robinhood was able to get in on the shorting action that was happening today, right? And Robinhood is also up because there was some specific news about Emergent Fidelity. They disclosed a 7.6% active stake in the company, which is a bullish sign that I'm thinking, and I mentioned this in a live stream earlier this week, Robinhood, I think, would make a great takeover story. Somebody come in offering, I don't know, $14, $15, $16 a share. I think that would be a good takeover price. Would Robinhood accept it? That would be the question. But with a big dog like Fidelity moving up a big stake, it's kind of like the Elon Musk move, right? Buy a large chunk of Twitter, get a big stake in the company, and then give them an offer they cannot refuse. Now, I do have news on Twitter that I'll share in just a moment. The deal might not go through, but it could. So we'll look at Twitter in just a moment. So all of this shorting activity that occurred today in the smaller caps, like Robinhood, also caused, and of course the overall price action in the market, caused the VIX. VIX is the ticker symbol, and you want to make sure you use the CBOE, and you can find that right here on the right. You want that VIX. The VIX dropped 9%. It declined by 9% today. And it's very interesting. You see this trend line that I put on the VIX here? It stopped right at that trend line. So this is something that if we want the markets to continue rising on Monday, we're going to need to see the VIX break this trend line right here. Break down underneath it, right? It's going to have to drill a hole and go through it. The trend line started on April the 21st, right? That's when things really kicked off in the volatility market. And then it bounced off of it on May the 4th and May the 5th. So watch the VIX closely on Monday. Can it get below 28? That's the big question. Can the VIX get below 28? Or is volatility going to continue to reverse and go up? Now, with the volatility index, the VIX coming down, it's reflecting reduced hedging interest and declines in safe haven assets like treasuries or even gold. We talked about gold yesterday, and I did a little more digging. GOLD, just go right for it. The top one is okay. We talked about gold yesterday, and I was curious if it could hold with this trend line here, right? And the wick dipped below the trend line, and it closed up above it. It closed at 1810. That 1800 mark, I think, is a line that if it does drop below that, well, things aren't going to look so good for gold in the short term. So gold was down 0.66%. Again, that 1800 level is crucial. Now, on the flip side of this, as long as the US dollar is continuing to gain strength and inflation goes down, that would be a bad thing for gold. If inflation stayed high, and I think inflation is going to stay high, then that could help keep gold up as well. But gold futures falling to 1810 today, it set another low, a 3-month low today, wrapping up 4 straight weekly declines as the US dollar continues to cap gold and other metals. And with a strong dollar, that also keeps a cap on people using gold to hedge against inflation. Okay. Selling interest in treasuries also pushed yields higher. The 2-year, you can look at that, US02Y for the 2-year, it rose 8 basis points to 2.59%, down a hair in after hours. And the 10-year, it rose 12 basis points. You can look at the 10-year, US10Y. It rose 12 basis points to 2.94%, down a little bit in the after hours. Now, Fed Chair Powell and Cleveland Fed President Mester, who is an FOMC voter, both reiterated support for a 50 basis point rate hike in the next 2 meetings. And that's exactly what I have written down here. We've got our meeting in July 26th and 27th. We should get a 50 basis point rate hike then. And then we've got September, or actually I'm jumping ahead. We got June 14th and 15th, and then July 26th and 27th. Those 2 meetings, we should get a 50 basis point rate hike in interest rates. And remember, the 2-year Treasury is more sensitive to the Fed's fund rate, excuse me, and the 10-year is more sensitive to economic growth and inflation. So, back to the Fed talking about the 50 basis point rate hike. After seeing this week's inflation data, and on a related note, hopes for peak inflation, that narrative was reinforced today by a flat month-over-month change in import prices for April and a downwardly revised export price for March to 4.1% from 4.5%. I'll talk a little bit more about them in a moment. All right, Twitter for a second here. TWTR for Twitter. It dropped nearly 10% today. Twitter shares fell nearly 10% today amid growing doubts about Elon Musk's takeover of the company. Really? Elon Musk tweeted that the deal was temporarily on hold following recent analysis that showed spam or fake accounts represented less than 5% of Twitter users, less than his expectations. But later, Elon Musk said that he was still committed to the deal. So we can take a breath. This could be an interesting buying opportunity because remember, the offer right now is for $54.20 a share. So if the deal closes at that price, then your shares would be turned into, well, they would be liquidated, and you would get $54.20 a share. It's sitting at $40.85 right now. So you'd get about a $13, $14 return on your investment if you were to buy in now and hold until the deal is finalized. Now, the thing about spam or fake accounts, if that number is larger than Elon Musk expected, that could give Elon room to exit and not take over Twitter. So it's a possibility, and that's why Twitter dropped 10% or nearly 10% today. The odds of this happening? I don't know. Who knows what is up Elon Musk's sleeve? I'm not going to try to pretend I'm that smart. Okay, on the economic front, we talked about this briefly. The preliminary University of Michigan of Index for Consumer Sentiment for May It dropped to 59.1% from 65.2% for April. Now, in the same period a year ago, the index was at an 82.9. So I think the key takeaway is that the decline in sentiment was broad-based across income, age, education, geography, and political affiliation. It didn't matter. With inflation factoring in prominently in consumers' assessment of their current financial situation, it's getting harder and harder for consumers to pay for the basics: food, lodging, shelter, gas. That was a big one. Okay. Now, we did touch on this part earlier, the import exports for April. Import prices were flat in April after increasing 2.9% in March. Excluding oil imports, prices rose 0.4% after increasing 1.2% in March. Export prices, they rose 0.6% after increasing 4.1% in March. Excluding agriculture, export prices also rose 0.5% after increasing 4.1% in March. We need to get our prices up, don't we? And we're paying too much. Okay, here's where we stand year to date. The Dow Jones is down 11.4%. The S&P 500 down 15.6%. The Russell 2000 down 20.2%. And the Nasdaq still in bearish territory, down 24.5%. Okay, if you could, I know this is a Friday and I don't want to keep you too long here. I know it's already been a half an hour. If you could, this would be very helpful. Click the like button, take the URL, share this video wherever you can, and click subscribe. Those are 3 very important things that you could do that help out greatly. Now, I totally appreciate all of you being here, watching our videos. It is very helpful. But something else that you can do that is also very helpful, and you get rewards for doing it, is clicking the first link in the description, the pinned link in the live chat, or going to tickertimenews.com/strategy. I'd love to see you there. All right. So you expect this rally to continue? That is a great question. There were a few concerns that I have with this relief rally. Let's pull up the S&P here. For this rally to continue, and to be honest, whatever this rally ends up being, I'm not sure we're out of the woods just yet as far as going back to an all-time high. What we need to see for this rally to continue is a couple of things. Number one, the VIX, right? VIX on TradingView. The trend line here. Oh, I clicked on the wrong one. Hold on. We want the CBOE. This trend line right here. The VIX closed right on it, right here. For this rally to continue, the VIX needs to break down. It needs to come down like this, right? This is what the VIX needs to do in order for this rally to continue, okay? That's number one. That's one of the first things that we need to see, and that's something that we can watch closely. We also need to see mega cap stocks doing well. companies like Apple, AAPL. We need to see Apple continuing its continuing to move forward. Apple, it needs to get back above $150 a share. That's an area that has acted as support for Apple. You could probably say there's a zone between 150, 152. There's a zone in there. Apple needs to get back above that area. Apple does that, the VIX comes down. Those are two good signs that this rally can continue. We also need headline news to stay chill. No unexpected feathers ruffled. So that's the third thing. You can also watch the Nasdaq because that's going to move a little quicker. And the Nasdaq has more of the mega caps than any of the other major indices. We can also let's see here. Here we go. This is an ETF to watch. Ticker symbol, write it down, put a sticky note up on your screen, MGK. This is the Vanguard Mega Cap Growth ETF. Okay. This ETF needs to keep moving forward. This has got all the mega caps in it, and it's the best way to track it. And you can see yesterday we came right down to this trend line. And this is something I shared with investors on Patreon in one of the notes that I sent out about what do we need for a sustained rally. Mega caps need to be moving up. They've been a drag on the market, and they need to pull the market up. If we look at this ETF over the year, so far in 2022, it's down 25.6%. It hit support right here, which was a good sign, 3 times now. So this support line is in. It's intact. It needs to continue rallying. And then there's a really interesting point here at $200 a share for this ETF. Again, the ticker symbol MGK. At $200 a share, it acted as support back in early May. It also, if we go back further, it acted as support back here in January of 2021 and March of 2021. So, as long as this ETF continues rising, I think the overall market will also continue to rise. Now, some of these smaller caps that we talked about earlier that have had some big runs over the past couple of days, they may see a slowdown. But for the overall market, for the majority of stocks, this is the fourth thing that you need to watch, and this is a critical one. So we've got the VIX. It needs to get down under 28. We have Apple needing to get above $150, $152 a share. We need the ETF, MGK, the ticker symbol again. We need that to get above 200. And then no crazy headline news. The Fed needs to be quiet. Inflation data came out. They don't have a meeting scheduled until June 14th and 15th. They just need to settle down and let the market move. If those 4 things are met, those are the 4 key areas that I'm watching for a sustained rally. Hopefully that helps to answer your question. Okay, ASAN and CFLT. Sure, we'll look at those. Let me just throw that up here to help. All right. Okay. All right. So small cap like this, 3.7 billion. The past 2 days, this is just like the other small caps that we talked about earlier in the stream. This thing having a 22% run today. And I bet if I measured it, it probably had a pretty big move from yesterday's low to today's high. 38, nearly, 38.8% move from yesterday's low to today's high. That's a big move for a small cap, but when you look at where it's come from, right? I mean, this thing has been beaten down, but it's going to take a while. And I do believe some of the gains that we've seen in like this 22.6% gain here today, or a 38% gain from yesterday's bottom to today's high, there was some short covering activity happening to cause these type of small cap stocks to shoot up so much in a 24-hour period. So I could see these coming back down to earth. But with any type of short covering activity, it's not a one-time thing and then it's over and done with and it never happens again. It's almost like a spring that compresses and decompresses and compresses and decompresses, like a living thing. This can come back down without digging too much into the company. Now, I see here they have earnings coming up 20 days. So, I mean, that's still a ways out. So that shouldn't affect them in the short term. But there is, it looks like here, just technically on the chart, there's an area around $30 to $32 a share. That's probably going to be some stiff resistance for this company to get back above. And I don't personally see them being able to do that. So if it cranks up a little bit higher, gets close to 30, then I think it's definitely coming back down. I could totally see it coming down from where it is now, profit taking occurring, maybe a little. I mean, it's a coin flip for what happens on Monday, quite honestly. But it's that $30 area from where it is right now. That's going to be a very, very tough resistance spot. You can see it on the chart here. It was resisted back here in the beginning of May. It acted as support back here in the middle of March. And when we were having the relief rally during March, it had a few good days. Let's see, a 10%, a 6%, and a 12%, but then it fizzled out while the rest of the market was still moving. So small caps, they can get a big burst and a big jolt and a big jump from short covering activity. But then as the rest of the market just continues moving up, these fizzle out. And that area I'm talking about is right here in the middle of the screen. This is when the snapback rally occurred. And you can see, I mean, it had 3 great days and then it just flattened out and then bled out from there. So that's something that I could see happening here if the rally continues in the overall market. Now, the other company was CFLT. Let's take a peek here. Oh, almost looks identical. 11.6% today. Down 71% for the year. That's down like most of these small caps. They're just down so big. Market cap's a little bit bigger, but this is a smaller cap company too. And, almost the same pattern here. If we look back here at the end of March, when the snapback rally occurred for the overall market, right here, instead of continuing, you know, it was 9 out of 11 days during the snapback rally. We got 1, 2, 3, 4, 5, 6, 7, 8. A day shy, not too bad. Had a 12% move, a 6%, 1, 2, 2, 7, and 1%. So some good moving there. But just like I said for the other company, technically for this one, we're looking at about a $28 a share. And that's going to be an area of some stiff resistance. So again, it's a coin flip on whether or not we're red or green on a small cap like this, just like the other one on Monday. Moving forward, if the rest of the market is continuing with those 4 key points that we need to watch in the market, if those key points are still moving in the right direction, then the rest of the market should follow. Now, again, though, these small cap companies, there was some shorting that was being covered, and that's what caused a big release today in a lot of these small cap companies. We went over several of them, like Afrm. Even though Afrm was kind of backed by its earnings a little bit, there was a lot of short covering happening today in small caps. That's not something that you can continue to see. These bigger moves that they've had over the past 24 hours, they will fizzle out, at least from my perspective here. You are welcome. Glad I could do that for you. All right. Well, if that's it, I don't want to keep you guys too long here. It is a wonderful Friday the 13th evening. So I guess we'll wrap it up here. Do remember, if you could, please click that like button, share this video, subscribe to catch our standalone videos. We do this live stream every day the market is open, after the market has closed, to talk about what happened, why it happened, and what to look forward to. And of course, we back everything up with the charts right here in front of you guys. And you can always do this at home by using TradingView. There is a link in the description for TradingView. It's a free platform to use. It actually has a great investing community on it. And then, of course, the last thing, and this is probably the most important thing you could do, because it's a win-win for both you and us, is by clicking the first link in the description or the link in the live chat, or by going to tickertimenews.com/strategy. Join us there. Ton of information. A lot of great information is shared there to help everyone to become better investors and help everyone along their investor journey. So thank you for joining me. I greatly appreciate you. You are awesome. I love you guys. Have a good weekend. We got a video of Afrm coming out later on. We also have a video about Toast. Not sure if you're familiar with that company. We did a video a little while ago, but they had their earnings this week and they were pretty decent. So we're going to share a video about Toast as well. All right, well, we'll wrap it up here. Thank you guys so very much for joining me. I greatly appreciate it. Remember, you are awesome, and we're all in this investor journey together. That's why we're here. All right, I'll see you in the next video. Take care.